Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, let's talk about, kind of the market setup going into this week. Heavy earnings week at the same time as we still have this shutdown going on right now. When you think about what's in front of you in terms of earnings, what are you watching out for?
Well, obviously, earnings just in general have actually been a little bit better than the street's expectations, and that usually does occur here. But we are seeing better expectations, especially when you're looking at the earnings per share that has come in for the S&P 500 so far. And for this week, as you kind of talked about, we do have Tesla on deck. I think that's going to be a very interesting one because obviously the near-term fundamentals might be a little bit pressured, but the street has been really kind of focusing on what's going to be coming down the pike here, next 5 years, 10 years or so, the humanoid robots, robo-taxis, things of that nature. So let's see how they actually do report. We also have Netflix coming out as well. Not a big headline mover. I mean, obviously we'll focus on it, but the price per share, sometimes a lot of retail traders will kind of stay away from that name. And then we also have others. I think Coca-Cola is also going to be a very interesting one. That's a consumer staple. We have seen consumer staples for the most part see a little bit of pressure, but PepsiCo over the last couple of weeks has really mentioned that they're kind of turning around their business and seeing some efficiencies. Is Coca-Cola going to be doing the same? So there's a lot of earnings, mixed earnings, obviously, when it comes to the sectors and even the defense stocks. I mean, you kind of just talked about a couple of them. What tailwinds are they seeing because of the European purchases? Obviously, we have seen increase in spending in Europe, and then also here domestically in the United States, who's actually winning some of these contracts from the U.S. government. I think that's also going to be key. So I think obviously the shutdown's been a focus, but the market really hasn't been too concerned about it yet. I still think the major focus this week is going to be China-U.S. trade talks and relations here, and hopefully we get a softer tone, and that probably will be bullish for equities overall.
Okay, speaking of China and some of the focus there, you had some fresh numbers out on the economic front from China, their GDP. What's the latest here?
Yeah, I would say the numbers overnight were actually kind of mixed. You did see their GDP coming in at 4.8% on a year-over-year basis for Q3. That's in line with the street's expectations, but down from Q2, which was sitting at around 5.2%. For China to kind of be rocking and rolling, if you will, Diane, you're looking at a GDP growth between 7 and around 8.5% or so. And obviously, we have been below that level, especially since COVID-19. The big issue that you are also seeing is the fixed asset investment. That actually came in negative 0.5%. Between January and September. Forecast is looking for a positive number there at 0.1%. So they are seeing their first contraction when it comes to fixed asset investment since 2020, since the pandemic. And obviously this is really kind of being dragged down by the property market just in general. They are still dealing with an oversupply of housing as well as maybe some internal fraud and things of that nature, which is obviously kind of transmitting throughout the overall economy. But when you're looking at the import-export data over the last couple of weeks for China, you could say it's actually been fairly mixed. You do see some bright spots when it comes to industrial production. That actually was better than the street's expectations. But once again, headwinds when it comes to the property market just in general. And then obviously the trade war has also kind of impacted their export capabilities and their export mix, to say the least here.
We need to move some of their housing here because we've got, the challenge of not enough inventory here while they have an abundance over in China. KG, how much does the shutdown matter at this point? I know earlier you said so far markets are kind of shrugging that off. Do you think as it gets longer in the tooth that it starts to have more weight?
Yeah, definitely. I mean, once you start having federal workers going without pay, also especially if you're kind of looking at the FAA or even some of the airport staff, if you start seeing them call off pretty significantly, creating delays at airports. Once it starts really impacting the consumer on a daily basis, I think that's when you're going to see a lot more pressure on Congress, as well as probably a little bit more pressure when it comes to the economy. And once again, we haven't really been focusing on it so much from an equity market standpoint, but obviously it is having an impact when it comes to the economy. And we will see that transmit throughout the data once the government does kind of reopen here over the next couple of months. But for now, nothing is completely broken as of yet. I think the trade deal, once again, is really going to be front and center. We also have earnings, and then hopefully being able to hold up this AI story or this narrative in order to give us a little bit more of a bull catalyst. You get a little bit concerned that maybe the market's a little bit exhausted though, Diane, so keep your eye out on that. I mean, the technicals are kind of breaking down here a tad bit, and we are getting towards and closer to that holiday season where it's usually traditionally bullish for equities. It just seems like we're turning over slightly here over the last couple of days.
Okay, and then let's talk about this outage this morning. AWS says it is resolved. There are still some reports on down detector of some issues, though. What's the latest here?
Yeah, we did see an outage reported earlier this morning around, let's say, 2 o'clock Pacific time, if you will. And this actually did impact around 70 AWS services, primarily in the East Coast, if you will, especially the data centers. This also had an impact when it came to the UK and some of their government websites. But you are seeing some platforms coming back online. There was an impact when it came to Snapchat, Reddit, Disney Plus, things of that nature. But this is just, once again, a signal and a sign that they do have a significant amount of reach when it comes to the cloud infrastructure, data infrastructure space. We did see a little bit of an outage. It was not something that was nefarious, it sounds like. It sounds like it was something that was internal when it came to a rollout or a patch, if you will. And so we are seeing, the shares are not even taking that much of a hit because of this situation here. And you are seeing, obviously, services coming back online. So kind of just remind you that AWS, as well as some of the other companies like Microsoft, they have a major impact when it comes to our lives on a day-by-day basis. And even a small outage like this can ripple throughout the overall world fairly quickly.
Okay, and then KG, let's talk a little bit about the levels that you're looking out for today for the S&P 500 to both the upside and downside.
Yeah, to the upside, 6730. To the downside, 6600. That has been a key area of support. VIX is sitting at around 20.2 right now, implying a 1.3% move. Diane, we got to close above that 20-day moving average. We continue to fade it all last week. Let's see if we're going to be able to recapture that and move to the upside here this week.
I know that's really been across your radar. Thank you, KG. That's our Kevin Green, Senior Markets Correspondent.